one nation, under God, indivisible, with liberty and justice for all.
Good evening and welcome. This meeting's being recorded and televised by Chelmsford Telemedia. If there's anyone else present who's planning to record, would you please so indicate at this time? All right, seeing none, we have some minutes to approve before we get on with things. You should have a packet, minutes from 7/24, 7/31, and August 7th. We'll do 7/24 first.
Move to approve minutes of July 24th, 2018.
I second.
Okay, all in favor?
Aye.
Any opposed? No abstentions. Next, the minutes of July 31st. I'm getting ahead of myself a little bit. Are there any comments on those?
Move to approve.
Any second?
Second.
All in favor?
Aye.
Aye.
Abstain.
Abstentions? Tom and Evan, yep. No opposed. Okay, and finally, the minutes of August 7th. Any comments?
Move to approve.
Second.
All in favor?
Aye.
Any opposition? Okay. With that, the next item on the agenda is public input. Before we get to your comments, we'll start with a brief presentation to go over some of the things that this committee's been working on. The only other thing I'll ask you to remember is just to please, pardon me? Just please have respect for the other speakers here. You may not agree with them, but please work under the assumption that their comments are being made in good faith. So with that, we'll begin with the presentation. We are the Tax Classification Study Committee. Since 2000, the average single-family tax bill has appreciated at about 4% annually, which is higher than most people would expect, given the fact of Proposition 2.5. The mission statement that the committee set for itself was that the purpose of the Tax Classification Study Committee will be to review the options available to relieve local real estate burden in Chelmsford. The committee will attempt to review and assess such options insofar as possible to recommend various courses of action for the Board of Selectmen to consider when deciding whether to adopt a uniform or split rate or any other measure of tax relief. That's fairly broad, and again, I think it's worth pointing out at this point that this body does not have the final say. It is, in fact, the Board of Selectmen who will make the choice in a couple of months about various options. So, what is classification? It's probably best understood as a series of local options which allow the town to manage its levy share, splitting it between the residential and the commercial base, but also allowing the town to maneuver, if it so chooses, within the residential base or the commercial base. Three major options are a split tax rate, a residential exemption, and a small commercial exemption. Any and all of these options can be adopted on an annual basis by a vote of the Board of Selectmen. It's been said before, but it bears repeating. The classification is not a method for raising additional revenue for the town. It only shifts the burden between or within various real estate classes. A quick primer on some of the mechanics here. With a single tax rate, you should be able to understand how it's set. Essentially, all of the property in town is appraised by the assessor's office. That appraisal is summed within different classes, and the classes are all summed together for a single levy value and an assessed value. The levy value, I should say, is generated from the previous year's value plus 2.5 plus any new growth that's allowed. The tax rate, the mill rate, then is set by dividing the assessed value by the levy. I'm sorry, the levy by the assessed value. I'm saying it backwards. So for a split rate then, the way that you would come up with a split rate is to, rather than accumulate all of the values together, you would split them between the residential and open space classes and the commercial, industrial, and personal property classes. The worksheet on the next page then I think shows you a little bit about how that would be done. You can see that the levy numbers have changed from the prior example. And what results is a lower residential rate and a higher CIP rate, although the values stay the same. So you can put together pretty quickly a chart that shows the difference, or the effects of a split rate on the residential class and the CIP classes. We've done that already for using the 2018 tax rates and values. This chart summarizes the difference there. You can see in that first column the taxes would be the same for a property value of $200,000, whether it's residential or CIP. If you have a split rate, then the tax due from the residential property would be different than the tax due from the CIP property. And you can see the differences there. The residential property value decline, or the tax due from the residential property declines, and the tax that is demanded from the CIP property is increased. The second major option is the residential exemption, which shifts the tax burden from lower value properties to higher value properties and non-resident occupied properties within the residential class. CIP properties are unaffected by this. Recently, the maximum allowable residential exemption was increased from 20% to 35% of the average assessed value of all residential partials. The effect of adopting a residential exemption is to shift the tax burden away from lower valued properties to the higher valued ones. So it makes the property tax slightly more progressive within the residential set. It should be noted that this is not a very popular exemption. Only 15 communities in Commonwealth have adopted it to date. Primarily, they are seasonal communities or communities with high rental property inventory, but there is nothing that requires that to be the case. You can see on the next page a breakdown of the effect of adopting a 10% residential exemption based on the 2018 rates. Once again, you have the residential properties and the taxes due in 2018. If you assume a 10% residential exemption, you can see that the lower valued properties wind up paying less tax, while the higher valued properties wind up paying more tax. The benefit, or the reduction, I should say, disappears at the average residential property value. So if your house were at the average, you'd have no difference in your tax bill, whether it's a 10% or 20% or 35% residential exemption. One of the things we also looked at was the effect of a residential exemption, not only on owner-occupied properties, but also rental properties. I'm sorry, I should go back and show you that second table there is the non-owner occupied property, and so that you can see that those units would wind up paying significantly more under a residential exemption. We looked at some properties here in town, rental units with varying numbers of units. We worked out what the increase with a 10% residential exemption would be for those properties, split that increase across the units equally, and then broke it down into a monthly increase. So you can see, anywhere from a $10 to a $60 or $70 increase in a rental property might be expected with a 10% residential exemption. For a 20% or 35%, that would be a higher increase, although not a linearly higher one. Small commercial exemption is applicable only to commercial parcels, much like the residential exemption applies only to residential parcels. The small commercial exemption can be up to 10% of the commercial parcels that meet certain criteria. Essentially, the parcel must be valued at no more than $1 million and have 10 or fewer full-time employees at each business located on the parcel. The difference here for various CFP property values. You can see the difference between the eligible parcels and the non-eligible parcels. The eligible parcels see really a rather dramatic decrease in their tax, their annual tax. The non-eligible parcels see an increase. Once again, the reason that the column in the eligible parcel box stops is because at $1 million, above $1 million, the exemption is no longer available. You can also mix and match these various options. So one thing we looked at was having a 1.1 split rate along with a 10% small commercial exemption. You can see there that you've got basically three categories of parcels at that point. The residential parcels all pay less under that scenario. The commercial parcels, which are eligible for the small commercial exemption, pay essentially the same amount of tax as they would without any split rate at all. The commercial and industrial parcels that are not eligible pay a good deal more on an annual basis, even with the small commercial exemption. And then combining all three, split rate with a 10% small commercial exemption and a 10% residential exemption, you can see that much of the decrease in the owner-occupied residential properties goes away, except at the lower ends where there's a significant reduction in the annual tax. Non-owner occupied and owner occupied residences that are above the median value both see increases. The CIP parcels that are not eligible for the small commercial exemption also see increases. And the CIP, the commercial parcels that are eligible for the small commercial exemption still see basically a flat line, a small reduction in their annual taxes. We were also asked by the selectmen to look at other exemptions and credits available to residents. The exemptions do not shift tax burdens within or between classes, nor do they affect the levy limit calculations, and any amount that is not reimbursed by the state is simply revenue that the town forgoes. A significant portion of some of these exemptions is reimbursed by the state. We've not broken that out here, but that will be in the final report. So the exemptions and credits can be broken down into a handful of major categories. The first is the 17D for qualifying seniors with limited assets who can receive a $175 annual exemption. Kind of similar to that is the 41C exemption, which is for qualifying seniors with limited assets and limited income. And that's a larger annual exemption. The two cannot be claimed in combination, but you can choose whichever is greater if you're eligible for both. Qualifying seniors may also defer tax payments until the residence is sold. That is something that can be combined with other exemptions. So you could receive an exemption from your property taxes to reduce the amount that you owe, and then that reduced amount can be deferred until the property is sold. People who are 60 and over may also earn up to $665 in annual credits in return for community service here in Chelmsford. This can also be combined with any of the other exemptions. The senior circuit breaker is provided by the state, and it's a state income tax credit for the property taxes. You can also combine this with other exemptions, but once again, the amount exempted is not eligible for the credit. There are also some exemptions for disabled veterans, and in some cases, their surviving spouses. If there are questions about that, anybody who thinks they're eligible for something like that or has a question about that, we'd urge you to reach out to the town's veterans agent. Any of the other exemptions or credits, I would encourage you to talk to the Board of Assessors. And then finally, there are some exemptions which are available for qualifying residents who are blind or paraplegics, and for survivors of police and firefighters killed in the line of duty. Okay, that's a brief overview of some of the things we've been working on. The real point of the meeting tonight is to hear from you, your questions, your concerns. So I'd invite you to come up to the microphone, introduce yourself, name and address, and we'll go from there.
Beth Logan, 36 Levitt Lane. And I know I didn't come here for the Levitt Lane talk. First, I just want to say I don't envy any of you guys. This is not an easy thing, and I understand that. But virtually every other town in Massachusetts, maybe every other town, but all the ones around us do have a split tax. And no, there's, when I looked. So anyway, I'd love a list of which don't then, but I want to point out that they do. And some people say that this will stop businesses from coming in, but it did not stop Chelmsford from buying the Forum. And we pay the commercial rates, as most of you probably know, which are, God, I want to say it's $32. It was substantial. I mean, I was shocked at how high it was. And I don't think we should go that extreme, but I do agree with the split tax. But I have a couple of reasons why that you may not have thought of. And I'm an enrolled agent, so I pay a lot. That's what I do for a living, is tax stuff. And I have a business in town, so I'm a business owner and a resident. The issue that that has come up this year that is very different than in the past is tax reform. And tax reform has resulted in residents not being able to, in most cases, not being able to deduct their real estate tax. And by not deducting it, that means that residents are predominantly paying their real estate after paying federal, well, everybody, and after state taxes. Businesses pay their taxes but can deduct it from their income. So they're actually paying the tax, paying the real estate tax before state and federal taxes. That is a difference. And I should have actually calculated the state as well. But that's a difference between an average tax bill of $6,500 for the business that pays before tax to over $8,000 if you're paying after tax, because you can't deduct this. Now keep in mind, a business gets to deduct not only their real estate tax, but their state tax, their mortgage interest, their insurance, their utilities, their repairs, and their maintenance. Even homeowners that can itemize can only do real estate tax, state tax, limited to $10,000 per return, and mortgage interest. We don't get to write off insurance, repairs, maintenance, all these other things. So residents are paying more to maintain a piece of property. Now, having said that, I don't think we should be as extreme as Billerica and some of the other towns, but I think it's not unreasonable to have a split tax rate. Now, you had a couple of other options in there, and one was to create a small business exemption. And here's one where you have to be careful, because again, tax reform has allowed what we call pass-throughs, so not C Corps, but other businesses, to take an additional 20% deduction from their income, depending on the size of the company. So some of them get even a bigger savings, some of them won't. It kind of depends on your size and type of company you are. But there's some other benefits to businesses. But that doesn't mean that some small businesses don't deserve a little break in this. My problem is we have to be really careful. And I'm going to create an example that's a business that can't be in Chelmsford because it's marijuana, and I'm only using that example so nobody thinks I'm pointing to any particular business. But let's say Cheech and Chong want to open a place in Vinyl Square. They don't want to pay the higher tax. So what they do is they buy the property and they actually put it in a second company's name. So there's one company, we'll call it Seth Rogen, seems kind of appropriate for the theme. Seth Rogen Realty. And that one building is worth $750,000 and has no employees and can just say, look, this is what we are, while they rent to Cheech and Chong that may be a little bigger. Or maybe Cheech and Chong can play games with the number of employees or split the business in two, that one half of, there's actually three businesses, one selling paraphernalia and one selling marijuana and one selling, so you're limiting the employees. So there are games companies can play. So one thing you might want to think about as you're doing this is ways to minimize those games that people can play by breaking it into subsidiaries or multiple companies. So, just a few more thoughts. My concern with the rental is that these landlords are just going to raise the rent. Let's just be honest. Rent is really high in Chelmsford already. So if you want nobody to rent in Chelmsford, that might be a good idea, but that's going to be an issue for us. And the final thing is the value based on homes, based on the home value. We're already paying higher based on lower, like if your home's only worth $200,000 versus $600,000, the $600,000 person is paying more than the $200,000, and not even a direct ratio because there's, if I understand the way the tax code is, there's a little bit that we don't pay on. There's some adjustment. So, but they're paying more.
You may have in mind the community preservation amount that goes on. A certain amount is
Oh, okay.
from that
Okay, that might be it.
calculation
Yeah.
is
But
deducted.
still, more expensive homes are already paying. So my concern there is that you're going to take the people who can afford the more expensive homes and kind of have them maybe think about other towns. And the other thing that a higher value home is often a home that's better maintained. So if you go around my neighborhood, I can tell you there are certain homes that aren't valued as much as they really should be because they're not maintained. And one of my beefs overall with real estate tax is it's based on an assessment that depends on how I maintain it. So if I take care of my house and I make my house look good and my property look nice and I keep it a quality home, I get charged more in taxes. And remember, those repairs and maintenance are not tax deductible for me, but they are for businesses. If my neighbor lets their home go to pot, then they pay less in taxes. So they make our community look bad, and the overall value of our homes go down, and yet they get a break on taxes. So I think basing it on the value of the home might just discourage people from maintaining the value of their home. So those are my topics. I know I gave you a lot. If you want more information on the tax code, I don't want to bore the entire town of Chelmsford with it. It's rather tedious, but I'd be happy to help. Thank you for listening.
Very good.
Anyone else?
You're either asleep or
You might have the last word this time.
This wasn't what we were expecting.
Joe Reddy, 9 Turnpike Road, Chelmsford, Mass. I actually own several businesses in Chelmsford, and I own several commercial properties here in Chelmsford. And no offense to the last speaker, but I find a little bit of it misleading. Sorry, I wasn't intending to talk on that. But yes, businesses are allowed to deduct the taxes and the expenses and everything that go into the operation of a business. But at the end of the day, there is profit, and that profit is what is taxed. No different than if you're a homeowner like I am. I come home with a paycheck. She comes home with a paycheck at the end of the day. That's what a business provides for me, is a paycheck. So when I come home, you know, that business is within its own operating. I understand that there's been some changes in the classification of taxes at the federal level, but that shouldn't impact, I think, how we tax things at the local level. Thank you.
I'm Kathy Kelly, and I'm from the Best Western, and this question doesn't really apply to the Best Western, but have you identified how many commercial properties in town actually fall under the $1 million threshold that have multiple tenants?
Frank Vane, I'm the chief assessor for the town. Commercial properties, we have roughly 400, I had it in here someplace, but well over 400 commercial properties. Roughly 380 of those would fall under $1 million in valuation, roughly 81%. In terms of how many that have 10 or fewer employees, we get a report from the Department of Unemployment and Assistance, and for fiscal 18, after combing through that report, I identified quickly 114 parcels that would qualify for the small commercial exemption. With that, and examining that and having some knowledge of the town, I'm confident that it's a number that's really in excess of that. But it is, you know, that I could certify at least 114 properties that would qualify for the small commercial.
And Frank, just to go over something that we've discussed with you before, if a business does not initially get classified as eligible, they can appeal that classification with you.
That's correct, and that's true of some of the other exemptions as well, Mike. That if their taxpayers agree, they feel they could have qualified and should have qualified, it's the same abatement process as when you're challenging the value of the property.
Thank you.
Following up on that, I just wanted to point out, and you may have already said this, but I'm not sure it's always that clear, that for small businesses that are tenants, even if they don't directly get affected by the tax classification, if the building is worth more than $1 million, that those tenants will, in all likelihood, pay the extra taxes. And so I have a concern for the small businesses in town as well as the bigger businesses in town. So I just wanted to emphasize that. Thanks.
Thank you.
My name is Eric Salerno. I live at 6 Loisel Lane in North Chelmsford. I appreciate the extensive research that the committee's put towards putting together all of these numbers. And I think that you've come a long way in terms of looking at multiple options that we weren't aware of even just a couple of months ago. But one of the things that I feel like may be missing in terms of the data that's being presented is the long-term effects. So while it's fairly rudimentary to go through the calculations to determine what the taxes would be paid on a specific year based on specific changes for a 12-month period. What I'm concerned about is the long-term strategic vision for the town. So if we take only the information that's been presented tonight into consideration and base decisions based strictly on those numbers, without taking into consideration what the projections are for 3, 5, or 10 years down the road, I'm concerned that they're going to have a negative impact when we felt like we were going to be making a positive impact specifically for our residents to provide relief. And what I haven't seen is specific research done on communities that might have implemented this, where we might be able to identify either similarities between the communities. I know a lot of times when we compare Chelmsford to another town or another area that might have used a split tax rate, people point out the differences in their local economy. However, without looking at what the overall impacts on the residential property values were, what the commercial properties were, what their increase or decrease in terms of building permits were, it becomes very difficult for us to determine if this is the right decision for us long-term. And I'd like to encourage the committee to look into data that might help us project what the overall impact on these types of decisions are going to be on the town, because we know that it's not going to necessarily affect the total levy that we collect, but rather the percentages, of course. But as those assessed values change and as people make different decisions about whether to move to town, maintain their homes, or start a business here, these numbers don't necessarily reflect specific projections with data behind them. Thanks.
Thank you.
Good evening. Doug Hausler. I'm a resident and a business owner owning commercial property in town. I asked that the committee also examine the history of what this classification, what the purpose was. I sometimes think we get lost for the forest for the trees, in the sense that the purpose of this whole thing originated in 1979, I believe, in the city of Boston, and it wound up being enacted as legislation to allow classification to take place. And the underlying reason for this was the inadequate assessments that were being done in the city of Boston. And it was a way to cure that problem. So the only reason you would use classification from a statutory purpose, and that's what it was enacted for, that was its purpose, was to even out the playing field. That's not the problem, that isn't a problem that Chelmsford faces. No one is going to criticize the Board of Assessors or the assessors themselves with the adequacy of their assessments, the process by which they do it, or the fact that they're being done in a fair and equal manner. So the statutory purpose doesn't even apply to this town. There's no reason we should be even looking at this. And I even suggest that it probably, and there could be a challenge to this, because I don't think it's it's an abuse of the statute. And I ask that this board, this committee, take a look at, is the underlying reason for classification, does it exist? Is it appropriate for Chelmsford? I suggest to you, I've done the research, it isn't. But please check your own research, confirm it for yourselves, what the statutory purpose was, and is that problem, the underlying root, the problem that is facing Chelmsford? You'll find that it isn't, and I hope that you eventually come to a finding that the statutory purpose is not necessarily being followed here, and it shouldn't be adopted in Chelmsford as a policy. Thank you.
Thank you. I have nowhere to be. So I'm content to wait, but if there are no more questions, I will entertain a motion to close the.
Can I make another comment?
Please do, yes, come on up.
Just as a follow-up to two comments that were made, one by Eric and one by Ms. Logan. Is it Logan or Hogan? Logan, sorry. Because businesses are able to deduct their real estate taxes before paying income taxes, and because the assessed value of businesses are based on profit, in a short period of time, I think that the assessments will change directly, the business assessments will change directly as a result of tax classification. And they may go down because of that, only to have the taxes then go back down. So it seems to me that tax classification over a period of a couple of years is just going to even itself out and not really serve the purpose that people think it's going to serve as far as what the effect is on residential taxes.
Thank you.
Well, we've heard it before, several times.
Okay.
Can I just make a comment or two? To Beth's comment about surrounding communities, we looked at surrounding communities. And I have here a list of what we call communities contiguous to Chelmsford, and 3 out of 6 have no classification, 3 do. If we look at the next group, pardon? Yeah, Billerica, Lowell, and Tewksbury do have classification. Tingsboro, Westford, and Carlisle do not. If we look at the next bunch of communities, 2, 4, 6, 8, another 10. 1, 2, 3, 4, 5. 5 do and 5 don't. The ones that don't are Concord, Acton, what is this? Groton, Dunstable, and Dracut. Don't. Bedford, Littleton, Andover, Wilmington, and Burlington do. So of those 15 communities which are considered in the area, half do and half don't have classification.
Statewide, roughly a third of the communities, 31%, classify the tax rate. 109.
So it's interesting when you look at that list because it's my understanding we're trying to develop more commercial. So some people could argue maybe this is the wrong thing. But if you look at that list, like Carlisle has almost no commercial.
Yeah.
Concord, but you look at that, the ones that have a lot of commercial, Billerica, Lowell, Tewksbury, actually have the classification. So it's kind of an interesting thing, and it doesn't appear that the argument that that businesses will leave necessarily fits with that. So like I said, again, I don't envy you guys at all. I think this is a very difficult thing. As I said, I am a business owner. I understand this kind of stuff, but I'd love if you let me pay all my real estate tax through my business. It would save me a lot of tax money.
Dick DeFreitas, I'm a resident and a commercial owner. I would like to know how many towns with the same business to resident tax base ratio classify and how many don't. We're at 17-18% business. That's like a 7-to-1 or a 6-to-1 ratio. And it's my understanding that all these towns like Burlington, Billerica, and so on, they have a very high ratio. They're up into the 30s and 40s. So it's less of a burden for them individually to classify than it is for us. So I would like to know how many towns in the Commonwealth with the same 6-to-1 ratio, 16-17% business base versus residential base classify.
So we have actually looked at that, and I'm getting a lot of good suggestions for things that need to be in the final report. We are taking this in. What we did was look at we broke out all the towns between 18% and 22% CIP ratio. Chelmsford has run between about 18 and 20 the last few years. And offhand, I want to say there's something in the low 20s of towns with a split rate and that ratio, and something in the high 20s of towns without a split rate, between 18 and 22%.
What do you mean high 20s, low 20s?
Like there's 25 to 29 towns with that sort of rate, that sort of commercial
And how
ratio.
many classify?
That's what I'm saying, that 20 to 25 plus don't classify, 20 to 25 do classify. It's fairly evenly split.
Even with,
Looking at the 18 to 22% commercial ratio, right? So, I mean, you can, I think we can debate whether it should be 18 to 20% or 16 to 22%, whatever. We happen to pick 18 to 22. And in that case, the ratio, or the number of towns is about equal. There are slightly more who do not have a split rate, but there are still a significant number that have a split rate within there. We've also looked at what happens to the total value of the CIP properties in those towns over time. And again, we'll make sure this gets into the final report. It's rather a spread. You can certainly pick out towns in that ratio, in that CIP ratio, who didn't classify and saw good growth in their CIP values. You can certainly find towns that did classify and saw similar kinds of growth in that ratio. We'll put it into the report, and you can get a look at it and see if you see a significant difference between the results. I think that's
just one other point. Make no mistake about it. Most businesses in this town rent or lease on a triple net lease, which means that any increase to the owner of the real estate will get passed directly to the business. That person, the owner, will not suffer at all, and it'll be the businesses that will suffer, and the small businesses are the ones that hire people. Keep that in mind.
Eric Salerno, 6 Loisel Lane. The last comment and your input in response to it made me think of one other thing to take into consideration with the data that you've already researched, in that if you're already looking at what happens to the CIP assessments over time, the only other thing that I can think of that could potentially skew that data is its proximity to Boston or an urban area. So if it's, I was actually surprised to hear that there was, almost the same number of communities that have the similar CIP ratio that have split or
there's
not.
a few more that don't have a split in the
Okay.
ratio where we are, but I think it's also true statewide that there's more towns that have a single rate than have a split rate.
Right, but when the report gets created, it would be interesting to look at it from a geographical perspective as well, just to see if those, in other words, when the assessment values that maybe it indicates that they didn't move, if we looked at it with regards to its proximity to an urban area, would
Sure,
indicate that the property
okay, we'll-
values were more stable.
It's going to depend on the amount of the classification as well. 10% versus 50%.
Yeah, we'll have to see what we can do in terms of, it's gonna be kind of a multi-parameter chart. We'll
And even if it was
we'll
just
see what we can
plotted
do.
literally on a map, like two different
Yeah, no,
colors,
I
one
agree.
of them
That's
that was.
a good way. That's a good way to show that information. It's just kind of non-trivial to do that.
Right, well, it's a non-trivial issue, right? So that's why it's a difficult thing to decide.
Yes.
Mr. Chairman, I'd like to ask him one question.
Are you?
Are you a business
amenable?
owner in town or just a resident? Or both?
I've been a resident in town for 14 years and own my second home here, so we've purchased a home and moved to a different one. And I've run a freelance independent business from a home office as well as other offices, like I've rented in Lowell and other towns for the past 9 years.
So right now you'd be a business owner
Correct.
as well?
But
Okay.
I don't have a triple net lease. I don't own commercial property.
Okay, understood.
Mr. Chairman, did we want to bring up some of the interviews that we have had in the past meetings that might address some of the concerns that were made?
Yeah. What do you guys think? My preference in hearing public input is usually to just let it stand on its own. But I think it's clear that there are some specific questions that have been asked that we can respond to. So yeah, I think if you have something that you want to bring forward that we've already covered, let's take a look at it, because I think based on what I'm seeing, maybe that'll generate additional questions.
Specifically, I was thinking of the Leominster discussion that we had, the gentleman that came, I can't remember his position was in economic development, I believe.
He was assessor.
Chief assessor, right?
Okay,
Yeah.
okay. And he went into the fact that they do not have a split rate and the reasons for that, and how they are thriving because of that. And one reason was, as far as I could see, is the long-standing management of that town. It was very secure and very strong. And they knew where they wanted to go, and they did not need to deal with any differences in their, tax classification, because they had it all plotted out. So it was a consistent thought process through the future years that was very positive for Leominster.
We have to add on that, theirs was not selectmen, it was a mayor.
That's
And
right.
it was a whole different town government that have plotted out for many years and have been there for 50 years, I guess, as mayor or something like that. I mean, it's entirely different than what we're dealing with now, I think. I mean, I don't think we can compare that.
Well, and when you say thriving,
Well, they were thriving in their city,
well, when
But
you
it's-
say thriving,
but it's difficult to.
when you
to
say
compare.
thriving, I think what we heard was fiscal discipline. They have a balanced budget. They have, they don't have to borrow money. So from a financial perspective, it was a great story. It was a compelling story.
Yes.
But I don't think that means they're thriving.
Well, you can't compare Chelmsford to Leominster, but financially, they're very secure.
Financially, they're secure.
And run very
The-
differently.
The town, anyway.
One of the comparisons he made was, and one of the reasons why we looked at Leominster is because of the proximity to Fitchburg, like us with Lowell. And he had told us how Fitchburg has a split rate, and that their valuation had gone down despite having more commercial property than Leominster. And that's the long-term impact that can happen with a split rate, is valuations can decline because of the simple math that I had illustrated earlier. You're paying more in expenses, your cash flow goes down, you divide that by a cap rate, and your valuation declines. And over time, that valuation declines to a point where if you put, or if you increase your classification amount to the max, it does even out, as it was mentioned earlier, and you can't go back. You can't go back to the residents and say, well, we're going to go back to a non-classified tax system, because it'd be too big of a burden on them. So you get stuck with this. You end up lowering valuation, and you're at the same baseline you were to begin with. And you've potentially lost good business and growth and a tax base as a result.
But in roughly 2 out of 3 communities that have introduced the split rate in the last 15, 20 years, they've actually seen their CIP ratio go up, not down.
So you can see we're of two minds on this.
Joe Reddy, 9 Turnpike Road. She sparked one thing, which, have you guys looked at Attleboro at all? Because I believe that Attleboro actually has been rolling back their tax classification, and actually, if you go and look it up, you probably see it online through YouTube videos. They've talked about the impact that it's had to have split the rate, and the fact that they've had to roll it back. It's been hard on residents, but they've needed to do it in order to attract businesses into their community. So it might be definitely a community worth checking out. I'm not saying they're exact comparisons, but they are a community that's had to roll back their split rate because of the aggressiveness and the loss of businesses.
We have looked at communities that have introduced a split rate, and also communities that have dropped a split rate since 2004 or so. And there are certainly examples of both. Attleboro doesn't.
It's
especially
either
ring a
Attleboro
bell.
or North Attleboro, but you should look it up.
It's possible that if they haven't, North Attleboro, yes, that has definitely come across our screens as a town that dropped it. And I think both you and the previous speaker made a good point that if you're going to introduce or drop a split rate, it needs to be done gradually in any case, because it's too big to put a jump like that in, either on the commercial side or on the residential side. So that is something that takes some foresight, some planning, and it's something that ought to be considered as part of the decision to either introduce or to eliminate a split rate.
Fair. Thank you.
Can Frank tell us how, Frank, I'm not sure you're the person to ask this question, but I don't know who else to do it. When he's just saying, when you're just saying how it's difficult to go from the split to its single for residents, how was it when Chelmsford did it after the 4 years? How did that go
Well,
over?
I wasn't really here for that time frame. What I can tell you is, at the max, it was 5%. So rolling that back was far less painful than, say, adopting a 15 or 20% split and attempting to roll that back when we have to almost take, politically, I guess is what we're talking about here, to do such a thing, and to continually increase the residential tax burden above and beyond what might be increased anyway as a result of the market and the natural organic shift, if you will, to then go up even more on rolling back a split tax rate is a realistically a difficult thing to do. Once again, Chelmsford, there are members here who have been here longer than myself. We went from 5%, held for a handful of years, and began to roll that back really, literally 1% of the time until it was phased out.
Thank you.
Jeff Hardy, 5 Maple Ave. I've been watching your meetings intently, and I got to tell you, you guys have brought in some great speakers, brought on some great information, and I suggest to anybody here or anybody who's watching, go back and watch the meetings. You'll get some great, solid information. What keeps coming up to me is the '94 report, and I hate to admit that I've read that ad nauseum at a much younger age, and that I'm even that old to say that, but it's a ton of similarities to what the conclusions and the questions and what you guys are. It's amazing to see the similarities about what's going on with these discussions was what was going on with those discussions back then and their conclusions and that type of thing. So I just, again, thank you for the work you're doing, and I just, to the point where you mentioned the speaker show, and that's what made me think of this, is I encourage people, go back and watch your meetings if you really want to because you've brought in some great people, brought in some good information that I think helps people understand the effects of what it could do for a town that only has 18% business in it. So again, thanks for your time and good luck.
Thank you.
Mr. Chairman?
Well, that might be the note to close on. Yes, did you have something? I'm sorry.
Well, it was just an issue that most people in town understand. I think some may not still, and I think it's a subject that could be brought up very quickly in relation to taxes and rolling back the taxes for residents 1 year and what that does to the future years after that and how it increases the taxes even more so. So Mary, I think
Yeah, do you want to
you
talk
can probably
about that a little
explain
bit,
that
Mary?
very well.
What I want to talk about.
Remember, we roll back the taxes residents. and
Well,
then-
I did a simulation. I said, what if we had, what did I use, 10%? I looked at a variety of
Yeah.
levels, and I looked over 12 years past of data. What if we had implemented this split tax rate in 12 years ago, because that's how much data I had. And I looked at it over that period of time. I mean, and the net effect is the first year you get a big drop in residential taxes. But you're still going to, future years, you're going to get increases. It's not going to keep going down. Every year you're still going to get an increase in taxes. And the net effect, this was personal, okay? In my view, the net effect at the end of the 12 years, what your tax bill looked like at the beginning and what it looked like at the end compared to if you didn't have a split tax rate was not that big a change over 12 years. And that was just my view and not that big a change is a subjective view. But, yeah, you get a bump the first year. But don't expect that bump the second year or any year thereafter, because you've got a new point to keep going up from.
Okay. Just expect to pay less every year.
Less than you would if a single tax rate were implemented
Yes.
that year.
Yes.
And that's where John and I come out differently. What are people going to look at? Yes, each year you will pay less if you split each year than you would under a single tax rate. But if you look from year to year, it's how does your bill change compared to the year before? And that's where I'm saying you won't see that decrease every year from year to year.
But it'll be there.
Different ways of looking at it. You can see this has been a lively committee.
It'll be a fun report.
Mr. Chairman, I just hope nobody leaves this room without asking a question or giving their opinion that they think they should have.
Hi, Emily Antle, 9 Mansur Street, and I'm on the select board. I would love to see those numbers. Can you actually put them in a chart? And
Sure.
similar to the ones that you've already got, where you have the houses broken down by amount? So what would a $200,000 house pay? What would a $400,000 house pay?
You know, let me just make the point, Emily. What's hard to do when you take a specific number
Right.
on a house, because
range?
what that house is in year one is
Is
not,
different from
is
year
gonna
two.
be different from year
Yes.
two and different from year three.
But perhaps you
I
could look
looked,
at the-
I did it for residential using the average single-family property value.
Okay,
And then I did it on my own house.
okay.
Because I had real values for
Sure.
that. And similarly, I haven't gone back with the subsequent data I've gotten on a real business, because those values are going to, the values are going to
course.
change over the years. And so you can't just plug in
No, you
200,000 or
can't, but
400,000 every year.
Could you look at quartiles? Could you look at, I mean, or
We could,
thirds? I mean, something. Is there some way you can break it down so that
You
you're like
can-
looking at the bottom third and the top third, or?
I think what Mary's saying is that if you use a fixed number, it kind of distorts what you see.
Sure.
Because that number may represent a bigger or lesser share of the residential
Yep.
community or the commercial community. We actually saw a qualitative change when Mary originally did her projection. She used a $1 million business as kind of a comparison point to the residential. And when we replaced that number with an actual business, again, we saw a qualitative change in the shape of the graph. We've also run more than just Mary's house, and I think it's significant that different houses showed different curves. They're not night and day.
No.
They all kind of go up in the same place, but the extent to which they go up differs, and that I think does reflect the underlying assessment. And I think you can see with some of the differences between the individual houses that it's the underlying assessment that drives the taxes as much or more than the specific rate.
And I understand that, and I understand that neighborhoods gain and lose value
Right.
depending on the year, and obviously a period of 12 years is huge. That's an entire generation moving through a school system. So you are going to lose that, and given, within the past 20 years, any 12 of those, you are going to hit a recession at some point in those. And so
Right.
you are going to have huge external factors, which is why specific houses don't do a whole lot of good, because then you can cherry pick to tell the story. But if you could look at some sort of average or broken down within quartiles or whatever makes the most sense to get a complete picture, if that's possible. And if it
Complete is
if
hard.
I am asking for a three-dimensional graph, I'm sorry, I don't mean that.
No, that's fine. I think that's always been one of the challenges with this conversation is
Yeah.
how do you. It's not enough to pick a number and say what to do. You have to look at real world effects.
Yes.
And in a lot of cases, external things are much more important.
Absolutely, yeah.
Than just the tax rate chosen. Clearly, if you have a recession, there's a lot more going on there, and it scrambles things kind of unpredictably. Depending on the recession, the residential sector may lose more value than the commercial, or vice versa, and all of that plays out. So, yeah, I think what we'll try to do is get some kind of a basket together, so that at least to kind of give some sense of what the extremes look like.
Yeah.
And I think that we'll have to go from there.
That's fine. I mean, you know, a range is fine too. I think any intelligent person reading that sort of thing will understand that that is a range and it is not representative of, like, there is no one truth here, you know, so. Thanks.
Do I have a motion to close the public input?
If no one else has anything to tell us, I will make that motion.
Second.
Any objections? All right, I'd like to thank you all for coming out. I do appreciate you taking the time, and we will build on the things we've heard. There's a lot of actionable information. We'll review it at the end of the meeting tonight.
You can
and try to
stay.
build.
They can stay.
You're welcome to stay if you like. Okay. We do have a couple of things. Upcoming meeting dates. We're not meeting next Tuesday because it's election day.
That's right.
That means we have 3 meetings left before we present to the selectmen on October 1st.
That's when we're presenting to the selectmen.
Well, we can talk about this, but you'll recall that the advice from the assessor's office was that if the selectmen were going to consider a residential exemption, they were going to need a little bit more time to work on that sort of thing. Since the selectmen will not meet the second Monday of October because it's a holiday, and the third Monday of October is town meeting, their first possible meeting after hearing our report would be the fourth Monday of October, and that's assuming town meeting doesn't go 3 sessions. So if we're going to advise them to consider a residential exemption, I think we need to do that October 1st. I suppose we could consider just making that recommendation at that time and hold off on the full report until a later date. But I think maybe it's better to shoot for the first. That's what I'm thinking. It's going to be too complicated otherwise.
We need to have an entire report
Yeah.
to consider all of their options. Okay.
Yeah. So that's kind of what we're looking at time-wise. I think there'll be a lot of writing to be done in the next few weeks. Because I think that last Monday in September, that's when we need to vote on things.
I have a question.
Yeah.
Finance Committee is requesting myself and hopefully somebody else to basically go over the information that we've garnered, which is, I think this presentation would be very, very good.
When?
I would assume that it would need to be before October 1st, so it has to be in September sometime. And I know what, they I believe, meet Wednesday nights? Is that what you recall, Mary?
No, Finance Committee always met on Thursday
Thursdays.
night.
And
Are they meeting? Well,
I don't know, I haven't found out yet.
tell them to call a meeting. If they want to report, tell them they better have a meeting soon.
Well, I just wanted to mention that because,
All right, will you
yeah, I'll find out.
check with Jim, maybe the 28th?
Okay.
Do they want to hear it before you vote? Or do they want to hear it before the selectmen hear it?
I'm basically liaison to the Finance Committee,
Right.
so they would want to hear it before any votes taken place.
And would they want time to consider it before giving you guidance
well,
on voting?
Well, they do know that tonight we were having this meeting, so I would think that possibly that they would be able to review the information that, has been communicated here.
Well, I guess I'm just asking if we plan on talking to them on the 21st, September 21st, that's the, third Thursday or whatever, and then the last Monday is the 25th.
September 24th
You're,
is
you're,
Friday.
you're off.
Am I off?
25th,
I'm
25th
sorry.
is Tuesday. 21st is Friday.
All right, so let me change my math. So the 24th is the Monday, so the 20th would be the Thursday preceding.
Correct.
Can I,
And is that enough time? I mean, can they hear it and then make a decision, or do they want to hear it on the 13th so that they've got a week to
I'll have to ask
cogitate?
Jim. He was thinking that we would come before him in October, but
Right.
that's not going to happen.
Did I miss a part of this?
They just want to know what
Why
we've
is he
done.
involved in
Yes,
this? I
and if
thought
there's any
we-
vote involved, I think it's
I
their
just
vote
want to
as
know
a-
what I'm doing now.
versus
You
me.
mean you don't have the authority to vote,
Right.
to make your vote and say it's their vote?
Right. What
Correct.
Sheila's saying is that since she's been appointed as a liaison, she wants direction from the committee on how to vote on things, which means they need to see things before we finalize them.
Well, can I just ask this dumb question? I understand she's the liaison, but she's the only person from that committee who has been in here at every meeting. So if the
Right.
rest of them have not been watching this on TV and she goes and give them what we just gave this, does that mean that they can make the same kind of decision that we can make? And that would give her the option of listening to what they're saying? That's not
That's their
fair.
business.
Well, yeah, I think
operate
it's their business.
Oh,
I
okay,
think
that's fine then. I
Mary,
just
Mary's
wanted to
gonna wanna do
understand
the
it's
same
my-
thing. She's a liaison with the Board of
I think I'm
Assessors.
independent to make my recommendation.
That's
Is
what
that
I
not
thought
true?
too.
There will be absolutely no action taken, whatever, by the Board of Assessors to tell Mary what to do.
Okay.
Pardon?
Given the personality, it wouldn't have.
No, I was just wondering who I go back to and ask.
You don't, well, anybody
mean-
you want to.
Okay, all right, all right.
But given these are recommendations,
Talk to Jim. Well, again, I think we've been kicking that can down the road, and I'm not feeling like we're gonna settle it tonight. I think everybody's gotta kind of gear up for the conversation about what's a recommendation and what's a data point,
Yeah, I don't-
right?
I thi-
I mean, we can put charts together, and numbers are numbers. But I think, once, if we go beyond that at all, I just don't see an easy way to make sure that everybody's voice is heard without just having 8 different reports. So we'll have to figure out a way to do that.
Well, should we focus on an outline for this report and divvy it up for
I think,
everybody to?
I think, yeah, let's spend the next couple of weeks, everybody should be thinking about what the final report ought to look like, what ought to be in it. If you want to start putting some things together, then bring them back in 2 weeks, and we'll see what overlaps, we'll try to mash things together, and we'll go from there.
well, I think that this is a good beginning.
I think this
It
is,
is
I
very
think
good,
it's a
yeah.
good beginning.
we fill
I think there's other things that we heard tonight that
Yes.
we've already addressed. I think there are a couple of things that maybe we've not fully addressed yet, and so that some additional work can be done on it. And, yeah, I mean, I think, we didn't talk about the outcomes of other towns that we looked at. We really didn't talk at all about the prospects for growing the commercial ratio, which we spent a couple of meetings really going around about on. And in one sense, that's tangential because it's not a local option. In another, it's very much part of the discussion that if you think of classification as one of 3 ways of ameliorating residential property taxes, along with growth of the CIP sector and restriction of spending, then I think it's helpful to have that to put the rest of this conversation into an overall context. And certainly we heard testimony to that effect from enough people that I don't think we're stretching to have a section that talks about that. So again, it's one thing to say these are the 3 ways. It's another to say, it's something else to say we prefer one or the other. We're gonna have to, I'll think more about that as well, but that's where I think about what you want to see in the final report, what it ought to look like, and my preference would be to include as many points of reference as possible. And then, again, at the end of the day, I do believe this is a political question, and it's properly answered by the political body, which is the Board of Selectmen.
But the way you've pointed out in your presentation, which, by the way, did an excellent job,
Yeah.
presenting tonight, too.
You did.
Kudos. It seems to me, and please, I would like to ask everybody in the committee, it seems to me like the real focus, or the meat and the bones, so to speak, is the classification question. The things that I'm seeing with the small business exemption and the residential exemption, I think those are really off the table. Again, I don't know how you all feel about it. I don't think it's fair to be burdening the higher property owners with the residential exemption, nor do I feel that the small business owners should get a benefit at the expense of the larger businesses. So those are savings or changes within the classes, correct?
Right.
They're not within the whole class. They're just with all of the combined classes. It's within the class themselves, residential or commercial. And they're tidbits, they're cookies, there's not a lot of meat there.
I'm not sure. This is something I've been meaning to look at for a little while now. I suspect the change from a residential exemption is actually fairly considerable to the change possible either in a split rate or a restriction of expenditures. That's one of the things I would like to try to understand is the relative magnitude of some of these possibilities. Maybe the small commercial exemption isn't that large in absolute terms. But again, we come back also to, what it means to one small business might be different than what it means to another small business, just like, saving $100 a year on your tax bill. Maybe that doesn't matter to some people and maybe to others it does. The other thing is, I would like to provide the selectmen with a roadmap for thinking about this, and as long as those options are there, I think they ought to be addressed in the report. Even if we point out, if it turns out that the relative change is small, that it's not a big lever to move things around, at least give them a sense of how big a lever is it. We've got to do that with the exemptions too. We were explicitly asked to talk about what exemptions have been just kind of neglected over time, and where $500 was a big exemption 10 years ago. It just isn't that much anymore, and should they consider in some cases raising it to 700 or 1,000? And again, what are the implications of that? Some of them you're not going to get very many takers. The others you might get a lot, and if it's not a reimbursable exemption, then it could have an effect. And at this point, I don't have a good sense yet of, are we talking about $100,000 or $1 million with some of these things if they play out kind of the way we think they will. But even that, I'll admit, it becomes a projection and a matter of opinion to say that, well, if we double the exemption, we're going to double the number of people who take it. That's a projection, and it probably reflects an underlying bias on my part. So I don't know how we can say, if it doubles, this is what it'll cost.
It's hypothetical, you're really
But it's a
not certain.
hypothetical, and any hypothetical is going to be an opinion.
And a concern that I have is that I would hope that the Board of Selectmen would not turn to us after formulating a report and say, this is not all the information that we were hoping to receive.
I think as we get to crunch time, I think a discussion with our liaison is in order about what they would like to see in the final report, so that we don't have that issue, yeah.
Right.
Do you think in the final report, it's going to be, Mary says yes or no, Ellen says yes or no? Is it going to be we're going to raise our hands? Or is it going to be that we're going to base all the information we had and write up a report, and then they figure out what to do with it? Because if we're voting, then that takes it out of their hands.
I hate to put everybody here in a situation where we're taking up and down votes on paragraphs, right? I would like to find some consensus, some coherent whole that we can all agree on. I mean, again, we all have our different views on what the best thing for Chelmsford is. And again, I think the selectmen recognize that. I think anybody who watches the meetings recognizes that. I don't think that's necessarily a weakness. If our differences, all the more so if we can come together on a core set of of facts or indicators, I think that makes them more significant. I don't know how far we can go down that road without having some kind of opinions. And I guess we'll have to see how it goes as we do the writing process. Frank?
With respect to the exemptions and trying to get a sense of what the impact might be on the budget if we were to go from the $500 to $750 or $1,000. And you're right, it would be an estimate. But I think not unlike what we've reviewed with some of these other things, if I take a look or try to find communities that have increased that from 5, at some points, there are plenty that have done it.
I mean, if you can find that data, because
I've never looked
I'm
for
not
it,
sure.
but
I'm not sure where to find that online.
I know where it should be. Let me take a shot at
Sure.
it. And see what I can come up with.
Doesn't that assume that the guiding principle is income-based?
That's right.
So the charge, correct me if I'm wrong, the charge from the Board of Selectmen never made any mention of prioritizing income-based methodology.
They asked us, well, if I may.
Yeah.
And
I
then the
think
whole
they
discussion of
mentioned-
classification's not income-based either.
They asked to look at no fewer than, the committee to review, I think 9 was the number that they mentioned. And that came out of the '04 report that were identified by the DOR as options that might be pursued by the selectmen. I believe personal exemptions was among them. If it wasn't,
It was.
Yeah.
But I mean, also things like the rental, the renters deduction
Yes.
on the income tax and other,
There were some
small
things in there I'd never heard of,
business
yeah.
preferences, that sort of thing, which I think that report finally concluded is probably beyond the purview. We were asked to address all 9, and it may be sufficient just to say, we concur with the assessment of the '04
Yeah,
report that this isn't something to pursue.
I think our challenge is, you heard from one of the speakers about long-term town strategy, strategic vision.
Yeah.
We don't determine that. And even writing our report, we can't necessarily prioritize income-based methodology over, just tax classification. We can bring it to their attention and, tell them that if it truly is income-based, you don't need classification. There's other options.
Right. Yeah. All right. Again, I think this is something we're going to be grappling with the next month or so.
So when are we next
Power
reconvening?
was available on the 24th, right?
That week.
Yeah, that
Whatever the date is.
last
I think it's the
Monday.
25th, is it? I believe I sent
I
that
thought
to
it was the
him.
25th, but then.
What's that?
it's-
25th is Tuesday.
Yeah, so it's got to be, we're
Okay.
meeting on Tuesdays.
Right.
Oh, well.
It
I have
works.
my, I have my
was right
calendar.
the first time. Okay,
So we're meeting next on,
The 11th.
so we will next meet on the 11th, yeah.
and we should come with drafts or whatever we want.
Whatever you want to see in,
Begin to cobble
and
it
we'll start
together.
to put it together. We'll start to collate it.
Okay.
I think that's the best way to do it. Okay, I actually have a bunch of action items from tonight. From Beth Logan, a list of surrounding towns which do or don't have a split rate. I think that we just need to make sure that we incorporate that in the final report.
I think so. That's-
We have it asked, and it's interesting that people wanted to see it.
And put that in, because I think she reflected a perception that everybody
Right,
else
right,
around here is
right.
split.
Well,
yeah.
to hear that only a third of the communities are
Right.
split
And-
rates.
Yeah, I think we should, again, that's
important.
I think we should include that level of detail as well, right? Like, it should
Yep.
go not only from the,
And also, Dick DeFreitas's comments about percentages of CIP
Right.
versus people who've chosen to implement a
right,
split tax
and
rate.
we have some of that data. I think we need to, let's keep his comment there, or his request there in mind as we put the report together, and make sure that we have something that addresses that as well.
I think you could do
I-
a simple chart.
That's right.
The whole state, as a matter of fact. for-
Right, exactly.
How many communities is it, Frank, that have split rate,
110, I think?
that have split tax
That's a
rates?
third.
That's right.
That's a-
So.
But how many have the residential and CIP?
Each one of those have roughly 13 to 15, Tom.
Yeah,
Almost
there's not
all-
very
the
many.
Small commercial exemption, of all the small commercial exemptions, only one community does not have a split rate, and that's Westford. All the others have both the small commercial exemption and the split tax rate.
Yeah, it looks like it's mostly being used as a way to mitigate
You-
the
you-
split.
A couple of us weren't here, but I think what I did see on YouTube was your discussion regarding the Westford rate, in which they've taken a stance on both of these.
Right.
And their stance is to get rid of that small commercial exemption.
I guess the question, though, becomes, is with the communities with the split rate, is the small commercial exemption utilized to have it? And, you know what I mean? If it's not effective,
Right, yeah.
I honestly, when you look around, I'll just use Summer Street as an example. All those businesses there don't qualify because the building as a whole
It's a
is
single
worth
building,
more than
right.
$1 million bucks.
Mhm.
So when you start to look at the small business community in that regard, in terms of the limitations on the exemption, you're really driving this, this population down to a very small
Well, again,
level.
and we do have statistics on that, and that should be included in the final report. I mean, what Chelmsford could expect if that scenario were adopted.
Yeah, I think that was in the charts that were in this presentation tonight to show how the combination of the two means the people who qualify for that small business exemption don't see a big jump in their tax rates when you do the split.
Right.
But-
But it's only the ones who qualify.
It's
for
only
it.
the ones who
Right.
qualify, and how many that is, et cetera, is questionable. But I thought the numbers were interesting, that what it
But
showed.
it sounds to me like the split rate towns, the small business exemption is more of a political tool to get around that. It's not an
That's how
effective
it's been
tool.
described to me by assessors over there.
Yeah.
We'll give you a long,
Well,
homespun story as to.
Sure, sure. I honestly, that's why I say I think it should be off the table. I don't think it's worthy of spending a lot of time on. I really think it's just a political.
It may very well be. I think the one of the challenges is, and we heard it from speakers tonight, one speaker tonight, Eric, I think, what kind of metrics are you using to look at effectiveness?
Right.
Right?
That's
It's
the
not
key.
just- It's
That's
not
the
just
key.
how many people are taking the exemption.
Yep.
It's how many are using it to prosper.
Yep.
Because if it's inadequate, then it doesn't help you that you've taken it. It just delays the day of reckoning. On the other hand, if there are communities that are using it to grow kind of entrepreneurial garage kind of businesses into bigger businesses that take more commercial space down the road in the town, that would be good to know. I just don't know where to find that kind of
Right.
information.
Right. It's very subjective.
Don't look at me.
Probably doesn't.
I'm having a, you've thrown me off this whole hour. I mean, it's like, I got a whole different aspect to this whole committee now. I'm just a little different than what I've had since I came in, and I don't like it at all.
From Beth, we also had a question about nonlinearity in residential valuation, which I hear what yours. She suggested that there was already an exemption, essentially. I think you correctly pointed out that there is a small CPA exemption, but there's no other exemption at this point.
Other than the CPA is Community Preservation Fund. I don't know if you're all familiar with it. You'll see it at the bottom of your tax bill each year. It's 1.5%. The exemption exists for residential parcels. The first $100,000 is exempt, then times 1.5%, and that's the surcharge, if you will.
Yeah.
That, for what it's worth, that $100,000 exemption does not exist for commercial or industrial. Beyond that, I didn't know, frankly, what she was talking about.
Yeah,
I suspect that's what she was
I
referring
think
to.
that's what she was referring to.
So I think, again, maybe we just make a note of it, that it's not and again, I think that's one where we say it's not a significant difference at the end of the day.
Can I ask a question about what she said? She made a comment, and maybe I misunderstood this or I didn't get it correctly, so please correct me while it's still in my mind. She said that something about if you're a business, you can take, no, I think it was Dick. I'm sorry, it was Dick DeFreitas. When he made the comment about if you own the building and you have tenants, you're going to pass the increase on to your tenants. But when we had the lady that you brought in from the,
Nina.
that did the taxes, her comment was that if you were a smart, small business person, you would have had an agreement with the owner of the building so that you would pay them the taxes, and then you get a part of your rent when you do your income tax, and they get to write off the taxes completely. Did I have that wrong?
I think it's just the way the lease is written.
Yeah.
At the end of the day, though, there's two types of leases. There's a triple net lease and there's a gross lease. The gross lease is your taxes are included in the lease payment. The triple net did not.
They're not, okay.
I think that's what.
That's what he
yes.
was talking about,
But
okay.
again, in both cases, I won't, not in both cases, but in the triple net lease case, the additional money that you pay in taxes is deductible as a normal business expense.
Correct.
Right?
Yeah.
So both ways, it's deductible.
I don't know, in the
To
gross,
them.
is it?
Well, no,
Because the
if-
gross, it wouldn't go up, right?
Correct.
With a gross lease, you're just paying a fixed amount,
Yep,
$1,500 a month, right?
right.
And if the taxes happen to go up while you're still in the lease,
You
that's
don't- it doesn't
that's the
make-
landlord's problem, not
Right.
yours.
So the
Okay, I
landlord
see
gets
what you're
that
saying.
extra
Yeah, yeah.
deduction.
Okay.
Right. Yeah, well, that's the flip side of that, is that the
Yep.
landlord gets to pass through the increase, but that landlord also gets to take the additional deduction, right?
Correct.
Okay.
So it's kind of a win-win for the landlord.
Can I
So-
just, that clarifies to what she was saying, comparing to residential under the new tax law, that the business is going to be able to deduct full amount of his taxes before he figures his income tax, or whereas the homeowner is going to be, and full amount of all of those expenses, mortgage interest and what else was there? And anyway, whereas the homeowner, and repairs to the building, et cetera, whereas the homeowner is limited to $10,000 under the new tax law, isn't that correct?
Right, and I think Amina's further point was that in many cases, people aren't even taking that $10,000 because they've got a larger standard deduction now. So they're
That's-
not itemizing their deductions in the first place, so it's not coming off at all.
Okay, so that qualifies the point that Beth was trying to make, is because you have
Right.
the new larger standard deduction.
But that's a federal tax level issue.
Yes.
That's not, you know what I mean? That could change too.
I-
So I really, I think we should be comparing apples and apples here. Local real estate taxation has nothing to do with federal taxation.
I'm not going to dispute that, Tara. I just was trying to make sure I
Yeah, no,
understood
you're
what
right,
she,
yeah.
what she was saying,
Right.
what she was
And,
telling
you know, as
us.
a business, you can deduct all those expenses. That's what businesses do.
Yeah.
But businesses take risks, businesses employ people, all that stuff, right? I mean, that's why corporate law is what it is. You know, you create a company that allows it to do certain things. It's different. It's just it's not fair to compare, I don't think, to compare an individual with a business. And it's a federal issue, as she was saying, versus a local
It
tax.
sounds like you're writing that section.
Well, I'd be happy to.
She had
That
one.
was good.
She had one other comment, Beth did, about assessment depending on the appearance of a residence, and I just wanted to check that with you, Frank.
Yeah, I was going to ask that too.
Is
yeah.
upkeep the sort of thing that's taken into account, or is it
Certainly,
just the
if a property
structure?
has deferred maintenance, showing wear and tear, and to the extent that would affect marketability, and we're aware of it, made aware of it, okay, maybe I would take a little something off for reflecting the fact that this house needs quite a bit. But because it doesn't have a deluxe kitchen, it is not going to be penalized. She also kind of implied that somebody might, by intent, let their property fall into disrepair for the sake of saving taxes. I don't know.
Yeah, it's a little far-fetched.
I don't know about that. But what we don't do, and she didn't really say this, but I thought she was coming close to saying this, if somebody has terrific landscaping that just, sets it apart, beautiful flora, I don't assess on flora or that type of thing.
Yeah.
But often if somebody has that kind of level of care to the home, it's reflected throughout the body of the home as well. So there is some attention paid to the condition of the home, certainly.
Meadowwood is cutting down all their trees, and we're bringing in dirt roads as of tomorrow.
Frank, if you could, so, like, you know, I look at appraisals all the time, and I see comments like average condition, above average condition, those kind of things, and they really don't seem to have that big of an impact on value. What really drives the value of the amenities of the property, the square footage of the property, those kind of things. So if you own a big opulent house, you know, if it's a 4,000 square foot house versus a 3,000 square foot house in the same neighborhood, it's obviously going to be worth more just because of its size.
That's right. And when we value a property, the presumption is that it's going to be of at least average condition, where we do put unless we see otherwise. What we do put emphasis on is the grade of the property, and that's often, I think that's often addressed in a residential appraisal, in which we're trying to set a value on the quality of the construction of the property. Does it have, you know, three-piece, we've all seen them, 2,500 square foot colonials, that is just your typical box colonial, average quality of construction, with another same-size property that has any number of different amenities, three-piece molding, beautiful base, a number of appointments that just set it apart, frankly. That plays a role in the marketplace. The marketplace does reflect that in the valuation, and we would in the assessment.
It's not as black and white as she was depicting.
No, she was getting into kind of a condition thing, and yeah, a grade of property is something we put, you know, it's no small amount of money. If we're recognizing a property as being an excellent grade, frankly, that's a fairly significant increase on the property.
10% increase, 20% increase?
All that, on the building value, yeah.
Yeah,
Yeah.
but not the land value.
No, the land is independent of
Right.
that in assessment.
So it's, okay, so it's, yeah.
So let's talk about that for a minute, too, land value, in terms of a building lot's a building lot's a building lot. You have, you know, whatever the zoning is, an acre, I think is what it is in Chelmsford. If you have an acre and a half, it doesn't make that lot more valuable.
It doesn't. We, just like we would with the building value, getting back to your example with a 3,000 square foot colonial versus, say, a 4,500 square foot colonial, if you price out the price per square foot, it's going to be less than that 4,500 square foot value, accounting for an economy of scale. It's similar with land. We assess the first acre of land at premium. The full and fair cash value, $230,000, $250,000, depending on where it is within the town. Every acre after that is valued at roughly $12,000 per acre. So you have that immediate reduction after zoning, especially, and we drop it right down. So the price per square foot begins to drop. Even if you're talking about, you know, 2 or 3 acre parcels. Once again, that first acre at premium, and then $12,000. We may take off a little more if it has wetlands and that sort of thing. But holding that constant, it would be $12,000 an acre. We take a look at that each and every year with the sales. Every year we have sales of properties that transfer with multiple acres. And consistently, we don't see, you know, 3 acre tracts, you know, selling for considerably more than an acre and a half. So that curve is working. And that's something the Department of Revenue reviews each and every year as well.
Well, I think that's the other thing, and that I think we did hear that, at least from Mr. Hausler, that, and it's something that we ought to put in the final report. There's no question about the adequacy of the assessing.
I'll write that part if you
And Frank, actually, on that point, one of the other things that I've heard is the reason for classification. Again, aside from the original reason that Doug explained, was for specific purposes, i.e., I think what I understood from when we did it, it was all because of the sewer system. But really, when you talk to someone who, you know, just knows, that understands what this law is all about, it's really for those kind of things, not for just, well, you know, fiscally we're behind the 8 ball in our revenue, so let's you know, take money from from Peter to pay Paul kind of thing.
That's correct, and I've heard of it being used in conjunction with overrides. I don't know how commonplace that is. Sometimes it's used in communities that have really one single large entity, and they're just trying to really shift it that way. All in all, it's just a political decision. Almost always, it's communities that have had it for a while. I don't know that it's a very dynamic. I'm curious how many do move out. I know you've looked at that a little bit, how many communities do move in and out of classification. It's certainly adjusted annually. Some use it, and probably many use it. they establish a ratio on the levy that they want to maintain if decided to, an 80-20 split. If the levy share is continually moving around, which of course it will be, they continually adjust the shift to get it back to that 80-20. So it might be only 1% or 2% each and every year, or not at all.
Yeah, I think the legal argument that there's no basis for classification is inadequate. The law itself doesn't say that the use of classification is restricted to any particular purpose. It is something that the town is allowed to do. It's a local option, and the selectmen have the final say in whether or not it's going to be done. It can be a good idea or a bad idea, but there's really no question about the legality of it as a structure. And I think to suggest that it would be challengeable in court, we may have to put a sentence in that that's just not something to worry about.
So, while you're at the podium, you want to grab a chair? Some of the things we heard tonight, and honestly, some good information, and, I think, I do agree with Helen. Sometimes you come in here with a certain perception, and you start to question, what you thought was right. And one of the, I guess, issues that I struggle with, and it was talked about a lot tonight, in terms of communities with certain residential to CIP ratios, why one community does it and one doesn't, and why it works for one and not the other. And I thought that looking at Chelmsford at an 18-20 split, just to round numbers, 80-20 split to round numbers, my thought was that the commercial base is too small to take on that burden. And if you look at a town like Billerica, Burlington, Lowell, whoever you want to use, where the CIP is much higher, that the business community may not be as sensitive to the split rate because the pie is bigger and they can absorb it better. They're not.
I think, and I don't have anything to support this, but getting back to Billerica, I'd be very curious how we take a look at their split is. I mean, their ratio to commercial. I don't know, what are they? 25%, 26%.
Yeah,
they're higher than ours.
They're not a lot higher than ours.
According to the data we have here, it's 20 in Billerica. It's 2674.
Yeah, which isn't a lot until you start talking about how much development you'd have to put into Chelmsford to get to 26%.
That, and the other factor is, and this is why I continually put it in and bring it up, what's the makeup of that 26%? How many of those are greater than $1 million? I began to look at that when I began to really dive into the small commercial. And it became, I frankly was stunned to see that at least within our commercial, 81% are valued at less than $1 million.
That's a really big
It is.
percentage.
And I was curious what that number would be in Billerica. I should email Rich and ask him which Scanlon's the assessor.
It might be interesting to know.
It would be, and that's not easily, unfortunately, I can't go to the DOR site and get that kind of data.
Right.
I would have to do some kind of a query, a survey. But I would be curious about that. It seems to me when you get into smaller, well, I don't know, when you get into smaller, it's different. UPS is different than
Right.
It's just different.
Looking at these figures tonight, in response to that, I was sort of amazed. Lowell, it says their CIP is only 16.5%.
Wow.
Page are you on?
Well, that's what I
Right,
said.
well, so, yeah, so.
Right.
Is there a number?
Well, and I think,
No.
I think the point that Eric Salerno made was that, if you look at not only just what the ratio is, but where it is, my takeaway from looking at that scatter plot was that each town and city is different. and I strongly suspect the growth or failure to thrive of a CIP sector is dependent on local conditions. And so that it's kind of tough, because what it means is that there's no guidance really for Chelmsford one way or the other. I mean, you might get some clues if you could get granular enough and understand whether you've got more or less of sub $1 million businesses, or more or less better access to highways, or whatever, right? Like, there clearly something is happening in the places that are expanding, and something else is happening in the places that decline, because there's a real range of experience over the same time period. So it's not as simple as saying, there was a recession. Right? Some places did better in a recession than other places did. And I wish I could tell the selectmen, here's all you gotta do. Just flip this switch and we're good to go. I don't think we're gonna be able to tell them that, give them that one silver bullet.
But I think what is true is that any city and town, the CIP will go up if they want to be there. So what makes them
Yeah, so
want
how
to
do
be
you,
there?
how do you get there? And I think this goes back to some of the work we did earlier with the economic development folks. They don't talk a lot about split rate, and we heard from Amina saying that in Woburn, it's just not a matter of discussion. But we heard from people elsewhere that it is important to them. We certainly heard from the CBA tonight that it's important to them. Some of that difference may just be, as Amina suggested, it's been a split rate for so long in Woburn, and there's no real conversation about changing it, that the businesses aren't gonna waste their time or their energy agitating for it. But when you've got a situation like you've got here in Chelmsford, you might get more political pushback from the business community. And again, I think you do have to take into consideration, what does that agitation look like on a long-term basis? If part of your plan is to try to grow the CIP valuation, then maybe then it's a different implication. If the local businesses are unhappy and complaining, then if you're in a bigger place and they don't band together or they don't talk so much. I don't know. I think that's a political decision that the selectmen are gonna have to make. How does classification go together with economic development? I think we can shed some light on it. We heard from enough people that we
Right.
can say some things about what we've heard are the important factors. But at the end of the day, they're going to have to say what matters to Chelmsford.
I go back to this 100 times, and I still think it is, and I heard what you just said, and I understand it, and I understand, no, don't go anywhere. And if I remember
An
correctly.
extra chair right there.
I know.
Yes.
Bedford has a split tax rate,
They do.
and it was after they got the split tax rate that they got more businesses. But let me just, so that you can understand where I'm coming from. But their proximity to Boston isn't much closer, and.
Is or is not?
It is. And it's busier, there's more traffic, you're on 95 compared to Chelmsford. Is that what you could be
I would think
afraid
so. It gets
of?
back to Mike's point, that he made just a moment ago. What other factors are involved in Bedford, in this case, that would have drove that value? Intuitively, it doesn't make any sense to me that the CIP taxes went up and that correlated to an increase in their valuation. Something else was at play here.
It was
Was it part of an
rezoning.
overall boom? Was it part?
It was rezoning.
Rezoned for development,
Rezoned?
yeah.
There you go.
Okay,
Thank you, Evan.
so if Bedford in the 80s was a bedroom community, like I heard that Chelmsford is.
Was.
I know, I was getting to that.
Actually, it's more bedroom now than it was back in the day,
Right, well-
right? Well, the
Well-
CIP percentage is lower than it used to be. It used to be 27%.
But I've been here a lot longer than you have.
Yes, you have.
But I'm saying, what the gist I'm trying to make is that the land closer to Boston is getting less and less and less. So people have to start moving out here, and we're going to start getting more businesses that are going to have to locate someplace, and it's gonna be here.
It's much more complicated than that.
Yes.
Okay.
That theory just doesn't.
It didn't sound good.
No, it's
I
not-
tried.
Yeah.
I thought it was a logical theory, but, okay.
If that theory were true, then 8 years out of the recession, 129 would be in a different place. And it's exactly where it was pretty much 8 years ago.
But okay, I'm not gonna
So
argue
it's just
that one.
That 10-mile difference between 128 and 495, it may take another cycle or two cycles before that economic engine, truly moves
Comes
up.
in.
Truly moves up the Route 3 corridor.
Okay,
And even that may not happen. So there's, what Eric was saying to me was he was looking for the data, which is where I began with this process. And I quickly realized and came to the conclusion, there's just too many factors. And at the end of the day, it has to be a local decision based upon local data points and what the community thinks it knows or what it does know about its particular community. And I say that within the context of what you understand your community to serve within the regional economy. And that goes back to what you're saying, that goes back to the community's general conversation about 129. It goes back to, how do we compare to Bill Ricca? The only data point that I think means anything is rent per square foot. That tells the full story. And in Bedford and Bill Ricca, it's a lot more than what you're getting in Chelmsford at 129. And the facts and the data in 129 are the rents haven't increased in almost a decade. And I'm not sure how anyone expects assessed values to increase if rents aren't increasing.
That's a good point that I
And
didn't
that's,
think
you know,
of.
that's the
Yeah.
piece that EDC has been trying to figure out. And it's a very difficult industry to figure out, the business models and why it is. But the fact of the matter is, our rents are low. And maybe Lowell's are higher, maybe Bill Ricca's are higher, maybe Bedford's are higher. But if you have a higher rent, the properties are gonna be worth more. So this notion of you just fill the buildings up in 129, yeah, you'll get back to 20%.
Right.
That doesn't solve any problem. So if you had 0 vacancy, okay, you're at 20%. But you still have low rents.
Now-
So,
okay.
this is what I'm gonna be writing about and then
Sorry,
submitting
you
to
took the
you.
words out of my mouth.
I've decided I'm not writing anything. It's just- I don't,
Because I think there's
Really
too many
confused.
distractions, right? I mean, we've heard people say as recently as last week that you split the rate because you raise revenue. And that's still out there. The notion that you just fill the buildings and, you increase revenue, and that's just not true. It's not enough.
My
Well, you-
favorite one is if the building is empty, they pay no taxes.
Yeah, right,
That's
right.
my favorite one.
no, they
Right.
pay
They
taxes
pay the
on that.
same.
Right.
The perception
Oh.
is that they don't.
So
Oh.
the strategy that I thought we were on, which goes back to strategic vision and what's the town's long-term strategy with all of this stuff is, I thought the strategy was focus on 129, increase the values via getting higher rents. Higher rents would be achieved by introducing amenities, which over time and incrementally would result in businesses willing to pay a higher price to be there. And that implementation is beginning, but that's a long-term process.
Right, and again, we talked about this, we can put some bounds on the expectations there.
Right,
And I
right.
think that is a reasonable thing to include in the report.
Yeah.
And probably there should be a section, as you said, about the overall strategic
Right.
vision of the town.
The difficulty is,
Because I do hear over and over again that that classification needs to be part of a bigger scheme. That it can't,
How does
you
it fit
can't
in?
treat it just as itself, right? Whether it's a split rate or a small commercial exemption, in and of itself, it's not enough. You have to think about how does it fit together with the other things that the town's doing. And
I was trying to speak to the continued request to compare us to other communities, and have it, be a data-driven analysis. And I think we've all come to the conclusion that it's really, really difficult to make many findings or conclusions other than you use the data to the best of your ability to make, to understand the local economy and how you fit into a regional context. If you're trying to compete, maybe Chelmsford is going to choose not to compete. I don't know.
Do you think that would happen?
Classification plays a role in whether you choose to compete. We've already talked about the
Yeah,
different
that's true.
businesses of different scopes and scales factored in differently.
So should our focus then be on, if the town's, I'm not even sure if the town has a long-term
Well, that
tax
goes back to
strategy.
policy, right? I mean, we don't,
Well,
we're not charged with.
yeah,
No, but I'm just saying, if the town is overall strategic plan is to increase the commercial base, do whatever to 129, isn't it fair to say that any kind of classification is contrary to that plan? I don't mean to dumb you down that
I
easily.
mean, I think
but-
some of us may have that position. I think the challenge is you have to have patience.
Correct, yeah, I'm not saying that classification can't be something to consider later, but right now, the map is already drawn, I think.
Then why did it come up when it did?
Well, because I think there's a difference between economic development strategy and tax strategy. And I think what we're hearing is that there's a desire for residential tax relief. That's why it came up again. And the sector of Chelmsford that's asking for residential tax relief is not the same sector or segment of Chelmsford that is discussing economic development. And I think you're
That's a
both
fair- that's a
you're
fair
both
statement.
correct to say that if your primary goal is to drive economic development and investment in this town, then having a split rate is probably antithetical to that. But I think there's a different point of view out there that might be summarized as saying, we're just gonna fill 129 again, we'll take the 20%, but instead of relying on economic growth to lessen the residential rate, we're just gonna lessen it with a split rate. And we'll take the 20%, because we think we can get back to 20%, we'll give up the goal of getting to 25%. And we'll take the gains now with a split rate.
So I would like to say this, I agree that perhaps they're two different strategies, but I will also say that the taxation strategy of splitting the tax rate is definitely, we're kidding ourselves if we're not thinking it's not political.
Oh,
We're kidding
we said
ourselves.
all
I mean,
along.
I think,
So,
The report will say that.
please, it should. It's been noted
Oh, sorry.
many times.
Just an observation. We hear a lot about economic development. Economic development is the wrong goal for this town or any other town. The goal needs to be economic and social development.
Thank you. You say
Prosperity.
everything so much better than
Could you expand on that?
There was one speaker who I won't name who said with respect to Chelmsford, we're doing great. Well, yeah, some people are doing great. Some people aren't doing so well at all. Economic development is a good thing, but economic in and of itself does not lift all boats. Economic and social development. We want a town that prospers for the people who live here and the people who work here and the people who own businesses here. Inclusive.
So you don't think that if 129 was developed the way Evan and his group wants to develop it, that it wouldn't be a social advantage to this town?
Oh, it very much could be, because they recognize that one of the most important amenities in that area was housing. Both, not just for the people who would live there, but also for the businesses who would.
Yeah. So I would argue that you can't have one without the other. You need economic development to have.
Oh,
social
I absolutely would agree with you, absolutely.
Didn't we have a vote a couple of years ago from the town for the voters wanted a tax reduction?
Yes. We just,
That went
Last year.
just on the last ballot in April.
on the last
for a
ballot.
split, yeah, for a split rate.
It was just an
And
advisory
it was a non-binding,
Right.
but didn't
That's why
it,
we're here.
didn't it?
Well, but
I was getting to that. That's why we're here.
right.
And wasn't it 80%,
No. 65-35.
65-35?
80-20, we're in favor of the small commercial exemption.
Okay, okay.
But 65-35.
But
is
60,
usually
I'll
pretty-
take
an
65. I'll
overwhelming
take
victory
52
in
at this
political
point.
terms.
But Dan,
but
the
I-
bottom line is, we all
And
want a tax
that's why
break.
we're here.
Right.
We all want to pay lower taxes, right? I mean, does anybody want to pay higher taxes?
When I grew up in this
That,
town,
but,
it was probably 95% residential. And we had the mills in North, and we had a couple of business, well, more than a couple. We had some businesses in the center. That was it. Couple of buildings were built later on 129. And for many years, all they did was build houses. Thousands of them. I mean, we went from 8,000 to 30,000, or 35.
Where were you then?
Population.
Here,
Population.
I was over 2 streets down.
Did you want them to do that?
I had no choice, I was only 15.
I should have known.
No, I did not want them to do that. I like this town as a rural farming community. There was also the mindset that they didn't want business of any magnitude or any more business. I served on the Board of Appeals from 75 to 1992. During that time, we had variances given, or I believe it was variances, for some of the construction on 129. Most of those brick buildings, Tamposi from Stoneham built them. I mean, did a great job, was a great developer. And that's what started the ball rolling on 129. And it stopped. And we had a little expansion in the center and a little expansion in North, but that was it. You know, rumor has it, the 3 Wang Towers could have been in this town. We had a 45-foot restriction. Still do, for the most part.
Well, I think that's why he gave you
And we
universal.
wanted to be a rural community or household.
So from a perspective like that,
And
economic development is not really the main
it's not,
goal.
who needs it?
Right.
Suddenly people decided, gee, I'm paying too much for taxes. Where have you been for 20 years? I've been paying too much for taxes for 40 years.
But it's a function of us
Actually,
spending
more
too
than
much.
that, but I won't go
That's
any
the reason
further.
why we're paying too much in taxes, because we're spending too much. So
In the
we gotta
wrong
find a
places.
way to support the budget. We
You
gotta
know,
find a way to
but-
support the levy.
Do I like it? Yeah, I like the school system. That's why I'm still here. I mean, I have four generations going through that school system. Number 4 is in the schools. That means my mother graduated from Chelmsford High School, which was this building. I did. My children did. And I have grandchildren that have and are. Both sides, my wife's side and my side. And they're trying and struggling, as Evan said, to get 129 going. We have a thing called the CBA. How much business have they brought into this town? Now, I can count it on 0. And that's wrong.
It's not the purpose of the CBA.
That's correct. I understand what the purpose is, and I don't happen to like it.
Well, it's no secret what the
And I
purpose is.
don't
of the
agree with
CBA.
it. I served on the Board of Appeals for many years. I chaired it for 8. Every so often, we'd have some lawyer or some applicant come in and tell us what we had to do or else. We've had the same thing here. We have an individual, Mr. Boucher? Boucher. I'm sorry, I don't mean to offend you.
Tom.
Tom works too.
I should have gone by time and better. If you do this, the businesses are not going to donate money. Want to bet that's wrong? Want to bet that won't happen? You never know, a lawyer comes in. Statutory problem. Didn't say we'll sue you, but said you could be sued. Bring it on. I had many, many lawyers tell me they were going to sue me, and did, as a member and chairman of the Board of Appeals. I never lost a case. Got a few sent back, but every time we went before a judge, it was our win. And at this point, I don't know what to do. I know what you want. I know how to write an outline. But do we or don't we? You know, that's, if Evan could say in 2 or 3 years, Route 129 will build 40 million, pick a number, $40 million worth of new construction. I know I've heard you say 80, but I'll be a little conservative. That would fix it.
It wouldn't fix it.
It's like 1%.
But it would only fix that. Well, if we go to what we're talking about, really, you know, it's the same thing. And with Mary's numbers, which I had done similar, you get the $200 a year, and that's it. You don't do reclassification every year.
Right. But
So
you
quite
can still
frankly,
show,
this
you
is
can
a
still show
mess.
that it is a mess. And I wish I had a better roadmap for everybody.
But that's the role of the Board of Selectmen's public hearing. To
Yeah,
take testimony like that.
They're gonna have to choose. I mean, we can point out,
No,
with a single split, a one-time split, that you have that savings every year, and at the same time, you're still gonna see your taxes increase. And then we can let the selectmen choose which of those two true things is more important to them.
I think it was the Westford,
Yeah.
Last week?
That report.
Last week?
the Westford classification study that gave them choices. This is what you get. This is the pros and this is the cons. And they did it 3 or 4 different.
Yeah.
And I thought that was a pretty good way to lay it out.
Okay. So maybe if we,
Because when I first started this committee, I thought we'd come to a conclusion, and like all the other committees I've served on, and bingo, you'd have a set of guidelines, this is what you should do. Doesn't work.
Right.
Or it's not working.
but I do like the idea of pros and cons. And then everybody gets a voice. We can, the body will be the things that we all agree on, and then we can each point out implications.
I'm
Right.
convinced they're gonna do what they please, that's probably not a good word.
I hope
They're
they,
gonna do-
I hope they do, I hope they do it from a more informed place.
As
Be-
well as.
Because of our
As
work.
well, as well as the community.
Yeah.
Yeah.
Remember, I mean, hopefully this report is read by many more people than 7,
Dozens.
5, yeah, dozens, right.
And the only other thing I left to say is I'm very disappointed in the turnout.
You're disappointed.
We picked the right room.
No, no,
Really?
We had 8 people come up to the microphone. I'm not counting.
I'm glad there were others here as well. I mean,
But there were no residents.
Yes, there
Well,
was. But let me tell you about the residents that I saw
No
here.
residents spoke.
No, they didn't, and they won't. But I can tell you tomorrow morning, my front door is gonna, my doorbell's gonna start ringing at 8 o'clock for questions.
But that's for the Board of Selectmen anyway.
Right. But,
Yeah, I understand.
Right.
I understand. But I
but,
would have liked to have heard some residents say something, and that disappointed me.
right. They've only been saying it to me for 20 years, and it wasn't until, to be honest with you, that I was at the December meeting, by chance for something else. And I listened to the comments about hearing, and this bothered me. This has bothered me since that meeting. When the businessmen, one after the other, I heard about 4 of them say, "We put you in those seats," from there. They're saying to the selectmen, "We put you in those seats. We voted you in because you promised us you wouldn't give us a split tax rate." And nobody but you and I talked. When I got up, I said, after hearing that, you need to listen to the whole community. You have to do what's right for everybody, not just the businessmen. They did what they felt was right. It was a split vote. Come this December, no matter what we say or do, I can guarantee you, you are not going to hear anybody but the businessmen stand at that podium other than you and I. And right now, I don't know where my vote is. I thought I did, but I don't.
Yeah.
I mean,
It's
there's a
difficult.
there's a lot to
Exactly where I'd
consider.
like to-
There's a lot to consider. There's a lot of things that come into play. And yes, if we help the residents and we hurt the business, or we help the business and we hurt the residents. I mean, we have had people, and I've said it before, I'll say it again, and anybody that's listening at home can know. We've had people that literally had to move out of Chelmsford because of the taxes. And we have other people who are hanging on by the skin of their teeth because they've lived in these houses for so long, and I'm not talking Meadowwood. And it's really sad. I mean, it's sad to see this, yet you go to other towns and you talk to people and you don't get the same thing. It's really sad. It's sad. And I have a funny feeling that what I would rather see, and nobody here's gonna like this, I would rather have a mayor than a selectman. No offense.
It's been talked about.
I think that's a different committee.
Yeah, it sure is.
I brought that up at
Big
the
enough to
charter
make that
committee
change, right?
meetings that we had. I was the only vote for Plan E.
I mean, it's amazing to me to
That's what
see
you
the
get,
difference
Plan
in
E.
the way they're run. And
Lowell?
I don't
Similar
know.
to Lowell.
Lowell has plenty.
You can remain a town.
Yeah,
The town of
With the mayor?
Framingham.
Yes.
Framingham's a city, but they call themselves a town.
yeah.
Legally, you are a city, by vote of the state legislature, they will allow you to fashion yourself as a town. You
Right.
can call yourself a town,
Right.
but you're not a town, you're a city.
Just like this is town offices and not town hall. There's the same ratio. Seriously. But,
And what advantage is there to having a mayor in this town rather than?
I don't know, I just seem to,
Okay.
when I look at the ones that do have mayors that have been in existence for a long period of time, and they've had slumps, they seem to be bringing businesses in different ways. And they run them differently. It's just different. I'm not saying it's right, I'm not saying it's better, but there wouldn't be us as a committee and we'd be home watching TV.
Leominster was a city, right, with the mayor? That was it?
Yeah.
Yes.
I don't know, maybe it's about stability, it's having that government that's around for a while, that, you know, if you have a different type of government that's changing over all the time, and you get selectmen that are, you know, they're not permanent.
I've never heard of another town that has had a mayor that long. I mean.
Yeah, well, I don't know,
The mayors I know, the towns,
Look
few
at- yeah, look
towns
at
I
Boston.
know, they turn over right away. Those are the ones I know. But
But I do think consistency and longevity certainly plays a role in how a town prospers or doesn't prosper.
yeah. Yeah, I think there's a difference, but
Well, that's because you don't get to be around very long if you don't prosper.
Yeah, right.
And you're not gonna get rid of the politics of that person that's there either.
Right.
you vote them out.
That's what I mean. I mean, it's still a political position, and generally when you have a mayor, you have a board of, a city council or something, all of whom are elected. Is it really any less or more a matter of the influence of one group or another to get them in place? I don't know.
I make the observation that the case could be made that we might be digressing a little bit.
Yes.
We are. Sorry.
I told you would say something.
Yes, you probably can.
I'll be
Okay.
quiet.
There are apparently no press questions tonight, which means it's time for Mary.
Oh, is that where we are? I thought we had.
Yeah,
more.
there's no subsequent public input. We've done the action items.
Oh, okay. Did we decide, are we having the gentleman come in on the 25th to?
The offer's been extended. I don't know how much input he'll be able to give us in terms of changing things around. But
Given that that's the last night, and we're gonna have the report ready at the end of that evening, okay. I
but
move to adjourn.
okay.
I second.
All in favor?
Aye.
Aye. Thank you very much. We will see you in 2 weeks.
You nailed it.
Sam,
15 minutes.
I have a question, now that we're on. Why would anybody in their right mind